Good day all. Ira Epstein of Linn Associates with your Monday agriculture update. And this is for August 19th, 2019, and the time is right now 4:35 p.m. Central Daylight Time. We had a lot of rain moving through the Midwest, and in fact, it's still going to be here tomorrow, so that's weighing on the crops. We did see the crop condition reports, though, that came out at 3 o'clock, and actually, they didn't improve. So the excellent parts were down. I think that with corn down 6, beans down 13, I don't know that the market will get more bearish tonight, even with that rain, because it says we're developing very late and we have to see what goes on. Another part that's going on right now is the pro-farmer crop tour. And we'll start getting reports daily now, just about, is they are in their cars taking a look at different parts of the Midwest, getting us an idea of what soybeans and corn crops are looking like. And yes, you look at it, how scientific it is, I don't know. But what the market does do is it reads it and it sees what they're seeing in the different regions, and it gives us an idea as to what is going on as you're looking, say, in Ohio versus Illinois versus Indiana. So those are the things going on through there. In the stock market, another strong day as President Trump yesterday had Robert Navarro and Larry Kudlow both on TV talking about China and deals, blah, blah, blah. You know, we've heard this, seen it before, so I'm tired of it. When I look at what's going on, though, in soybeans on the weekly chart, you can see how you did get up last week to the 18-week moving average and you fell back from there. When I go on to the November beans on a daily chart, I'm going to leave this line in place because I think it's a solid downtrend line. And as you can see, it's intersecting now probably in the 885 area. What is the pattern of the market? It's bearish. You have a pattern right now of lower highs, lower lows. That's bearish until the market can get up and through this high, and that high was specifically 880 3/4. So until that's taken out, you have the pattern like a stepping ladder. Lower highs, lower lows, called a downtrend. You're under the 18-day average of closes, which is under the 100, which is under the 200. So everything's lined up in a bearish scenario. You had your last crossover right about here, and the market really hasn't been able to get back up and over the 100-day average since that took place. In looking at what the market could reach for, well, one of the targets could be the lower Bollinger Band, let's call it the 854 3/4 zone. So to keep the trend down, you've got to keep momentum down. Momentum is pointing down, the bias is down, and I define bias as being up or down in relation to the 18-day average of closes. Wherever you're settling, if it's under it, I give it downside bias, which means the swing line's in full force. So I have the trend down, the bias down, momentum down, resistance 800 3/4, and that comes in right now, if you'll notice, that 18-day average of closes, which will drop a little bit tonight when we reopen. In the meal market, meal had come down. It's still down $3 for the day. The pattern is one of lower highs, lower lows. Unlike soybeans, it is oversold. If you were to get back over 301, you would negate the downtrend. You would have to close up and over 302.90 to give it upside bias. And today's low at 296.60 is a double bottom with 2 days ago's low of 296.60. If you were to take out first 296.60, then 301, you could not develop an uptrend. You can end the downtrend, you can't develop an uptrend. Support, 294.20. In soybean oil, you've got a pattern now that's bearish on the swing line with lower highs, lower lows, and that formed today. Prior to that, you had higher lows, higher highs. You can see the action last week, and now when you took out the low here, you put the market in play to the downside. The first logical support is the 18-day average of closes, simply because it was right under the market, and that's where you want. If you continue down, then the 100-day and eventually the lower Bollinger Band could be another support area. Because the market settled at 29.04 and the 18-day average is 28.99, I say the bias up, the swing line trend down, momentum pointing down. In the corn market, all that we really did is move from being too far on the big break that we saw when we got a week ago, all the crop numbers, if you'll recall, how much acreage and big yields, and this is a bounce. You still have an embedded reading. Nothing here is bullish. This is still very much in a bear trend that ends if you get the red line that makes up the slow stochastic, and it's at 1126 right now, closing over 20. Until that occurs, I think the rallies get sold by those that are still bearish. In the wheat market, you're oversold, not like corn, which is embedded, has the lower highs, lower lows. It hit its downside target right here. Yes, it's working its way down, but it's not leaning on that lower Bollinger Band. As bearish as the market looks here, be a bit cautious. Oversold is that. It's oversold. In the sugar market, the trend remains bearish. Lower highs, lower lows, momentum down, bias down. 1128 is a number very much in play as the Bollinger Band. You negate the downtrend if you take out 1169. That would give you a lower low and a higher high. In the coffee market, you finally made it back down. I'll show you this. You hadn't hit a Bollinger Band since back here. You had a rally where you even got yourself higher lows, higher highs. You broke through that, stalled out. Now you're back down right into another support zone. What's this doing? The embedded reading. I thought you were going to lose that a week ago. It lost it one day, regained it, lost it. You can only gain it back if you lose it the day after you lose it. Otherwise, you've got to go through the whole 3-day process again. This market's been a real surprise to the downside. Remember what I told you? Go to Starbucks, ask for the manager, why aren't they lowering their coffee prices? You see it. In the cocoa market, I'm a hot chocolate drinker in the winter. I'm hoping my chocolate prices are down. You still have the embedded reading. Market doesn't even bounce. So the soft commodities are in real trouble. And in the cotton, market acts like today could have been an important day to end this contra-trend move. I say contra-trend because you've been staying under the 18-day average, which means I have a downside bias. So when you get the swing line turning up, that's okay. Often it leads to the 18-day average. We didn't get there. We didn't embed either to get there. It's just a market that was moving that way. And with today's outside day down until today's highs taken out, I think you gave new life to those that want to be bearish. In the cattle market, we continue to have lower highs, lower lows, embedded reading. There's just nothing bullish on this chart. Too much of it. Until you lose the embedded reading, I'd view rallies in this market as opportunities for those that are bearish to be selling. I'm not saying that about feeder cattle. The pattern's different. You have a market that was oversold right here, and that tied in with these prices. It then started moving to the right hand, and it has worked itself out of being oversold. But what is the trend? It's down. Lower highs, lower lows. The chart would clear itself up from this move that you had down and then the reversal of an outside day down. You took out the high of it. If you take out 132.42.5, you would have a cleaner picture that is still in the bear camp. The problem is getting down another 100 points, you could be in oversold condition again. In the hog market, you still have a market that is bearish, lower highs, lower lows. And as much as we keep hearing, oh, the U.S. and China are talking and things are better, I don't buy into it at all. I think we'll hear that and just keep hearing it over and over. I'm not seeing the hogs pick up. I'm not seeing the grain markets pick up. I realize that the U.S. did allow Huawei to do more, U.S. companies to sell products, and that's because we have about 40 systems that have their products in it out in the hinterland, believe it or not in the big cities. And if you just shut off what they need, it can be a problem. So the Trump administration's walking a fine line there, and they'll say whatever, but I seriously doubt that the grain markets in any manner are saying these markets look better at this point in time. We write about this, and we're going to be writing about the farm tour on a regular basis. So our people are out there. I already read our agriculture reports. You want to read them. Then you want to read what's going on in the meats from that. So if you're a person that looks at the grains and you're looking at this video, fits right in with what you're doing at that point in time. I would take a hard look at it. Our soft commodities are interesting. And when you go to our website and you sign up for any of our free offers, you should absolutely try the software that we have, the HTML version or Java-based version of our platforms. Here's the reason why. Especially on the HTML version, we broadcast all day long through it. So you'll hear David Hightower. You're going to hear our grain analyst, our soft people. Do you like cycle work? We've got our cyclist people that talk about where the market's at in terms of expecting bounces, breaks, and so on. Simply go to the website. You'll see we've got a whole new look on the front of it. Look for our free offers. Choose what you want. We'll take it from there. I'm Ira Epstein. You have a good day. I'll see you tomorrow.